Hey, Mike Swanson here. It's time to talk about gold. Gold has been in a great bull market this year, but it's been pulling back since August, and so have the mining stocks, and people have kind of like forgotten about it. But now's not the time to forget about it because I believe that pullback is going to end soon. We're heading for a great buy point in October. So let's talk about what's going on. This is the HUI Gold Bugs Index, tracks the leading mining stocks. It's gone from 100 to close to 290 at the peak in August. You're talking about a gain of 290%. Now it's around 230. As you can see, we had a quick pullback. It went down to its 150-day moving average, and the thing is now everyone's asleep on gold. If you watch CNBC, for example, they tend to talk about on any given day what stock has gone up the most that day or what sector's gone up the most that day. So last week, a lot of attention was spent on semiconductor stocks and zero on gold, even though gold has been going up more than anything else this year. The price of gold is up over 20-some%, while the S&P 500 is only up 7.7% year to date and barely up over the past 12 months. But you got to focus on what's going on in the big picture, not get caught up on just day-by-day moves, to focus on what's really important, and it is gold. So really the question we got to ask ourselves is, when is the gold pullback going to end? When are the gold stocks going to turn up? Well, again, we've got to always think about the big picture, and stage analysis gives us the big picture. To do that, I look at the long-term 150-day moving averages and see where the sector, the asset class, the stock I'm looking at is in relationship to that to determine what the big picture is. I'm talking about the trends that last for years. Gold, the HUI, is above those long-term moving averages in red and green here, and started as stage 2 bull market in February. So that's where we are. Most bull markets last 3 to 5 years. Now, there's seasonal factors also impacting the price of gold itself. Here's gold itself. It closed at 1317 at the end of September. And you can see the long-term moving average. The first one is at 1291. That's the red one. The one below that is at 1252. Support is really 1310. That's about where the low was in August. And you can see the peak was made in June for the price of gold, the last price peak around 1375. Now, I think there is a chance that gold will break $1,300 in October. And if it does that, it could easily go to 1291, maybe even towards 1250. That would be a very short-lived drop. Look at what gold did in May. It had a very short-lived drop, lasted about a week. Then it turned around and punched higher from 1200 to 1375 for a great return. And the gold stocks, of course, exploded because gold stocks tend to go up more than the price of gold does when a big bull market's going on like we've seen this year. So look for a potential dip below 1300 for a good buy point. If it doesn't dip, then we need to see gold break through 1350 to resume an uptrend. That's the last price resistance level. But be on guard or ready for one move or the other to break the consolidation downtrend that we're in. Now, here's a great timing indicator, though, if you want to spot a specific buy point, and it's what I'm watching like a hawk right now. This is the HUI divided by gold ratio. It's taking the price of the HUI, dividing it by the price of gold. What that does is it allows us to easily track how the gold stocks are performing relative to the metal. As you can see, this ratio was in a sharp decline from 2011 to 2015, once it finally bottomed out, made a double bottom in 2016, exploded higher. Now, what's going on here? This ratio is key because it tends to give a good trend indicator for what the future is. When this ratio is declining, means the gold stocks are lagging gold. And that's a key because they tend to lead the action in gold. When the gold stocks lag, that's a warning that gold is going to be weak. But when this ratio goes up, it's an indication that the gold stocks are going to lead gold, and gold's going to go up and follow. The gold prices tend to lead this ratio. So what happened is this ratio exploded higher in February, peaked out around June. When it was going up like that, it was telling us that this move is real, and it's exciting, and it's powerful, more powerful than anyone really thought. In fact, I saw so many predictions for gold to crash while gold was going up. All those people were proven wrong. And what happened, though, was as we reached the end of June, that ratio peaked out and went down. Nonetheless, gold stocks didn't decline. They stayed up because gold was going up kind of without them. The ratio is signaling, though, that some sort of correction was ahead, and it came starting in August for the gold stocks. So here we are now. This is a 60-minute chart of the ratio, and it's now going sideways. It's not in the decline it was in August. It's going sideways. It went sideways in June. As you can see, I circled. It went sideways in May. As you can see that I circled. I believe this ratio is going to turn up in October and signal to us that we've got a buy signal using this ratio, and gold is going to go up. The gold stocks are going to rally up to their highs, and then we're back into the bull mode. So this is what I'm watching right now. I think this is going to turn up this month, could even start this week. So I think if you want to be a part of this sector and that's gone up more than any other sector in the stock market, that's the mining stocks, you've got to be watching this ratio. You should be averaging it now or watching this ratio for an ultimate buy point signal in October. That's what I'm doing with my premium private members. It's called the Power Investor Group. So get ready. There's more details about gold, what's going on in the gold market, and specific mining stocks in the link below. And also, if you go to that link and read what the information I got there, you'll also see that right now the total gold trading program is open to new members, and so is the Power Investor Group. It's not been open or available for the past couple of months, but here it is. So click below for more information, take action, and I'll see you on the other side.